Hey there, let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Welcome back to another exciting video. Let's take a look at the highlights from the past day. Bitcoin has turned red after days of green and fluctuations. CZ faces the possibility of a 36-month prison sentence and his letter. Meta just announced Q1 revenue and profit both surpassing expectations, yet the stock plummeted 20% after market close, wiping out $200 billion in market cap. And there's plenty more hot news from around the globe. So grab yourself a cup of tea or tune in while you multitask to catch up on the latest in the global crypto market. So here's the lowdown on the whole HBAR and BlackRock drama. Picture this. HBAR's price was like a rocket after some buzz about teaming up with BlackRock. The HBAR Foundation was all, hey, we've got Archax and Onera tokenizing BlackRock's treasury fund on Hedera Hashgraph. And just like that, HBAR's value shot up 120% in just half a day. Talk about a wild ride. But then, plot twist, BlackRock steps in and is like, hold up, we're not in this dance. They totally denied any deals with Archax and Onera and made it clear they weren't mingling with Hedera or tokenizing any funds, including their big $22 billion money market fund. After that bombshell, HBAR's price took a nosedive back to $0.11. That's a nearly 40% drop in a day. Ouch. The HBAR Foundation's post about the whole thing got a ton of eyeballs, with over 2.9 million views and 3,200 reposts. People were definitely watching. Now, Graham Rodford from Archax, he's the CEO, by the way, came out to clear the air. He said, "This was our call, and BlackRock knew we were tokenizing their fund shares." He added that they usually don't need a nod from the fund managers to make tokens, but they like to keep things friendly for the long haul. So, there you have it, a classic case of crypto chaos when communication gets messy. It's a reminder that in the crypto world, news travels fast, and prices travel even faster. All right, let's dive a bit deeper into Bitcoin's roller coaster ride post-halving. So, we've got this halving event that's like a big deal in the crypto world, right? It's when the reward for mining new blocks is halved, hence the name. Now, just 5 days after this event, Bitcoin's price, which had been soaring to a lofty 67K and hanging out at 66K, decided to take a slide down to 64K. This isn't just a random dip. It's the first notable drop since the halving happened. But here's the interesting bit. If we look back at Bitcoin's track record, it's like a pattern. After each halving, Bitcoin tends to shoot up to new heights, then it takes a little breather with a slight price adjustment, and after that, it's off to the races again, climbing up the price ladder. So, what's next for Bitcoin? Well, if history is any guide, we might see some more exciting price action in the near future. And you know what? You don't have to miss a beat. If you're into following this crypto saga, give us a thumbs up, hit that subscribe button, and stay tuned. We're here to keep you updated with all the latest and greatest from Bitcoin and the crypto universe. Trust me, you won't want to miss what's coming next in this digital currency adventure. All right, let's chat about Christian Langelis, the dude who became a bit of a legend for holding up a Buy Bitcoin sign. So back in 2017, this guy made waves when he flashed his sign behind Janet Yellen, the big cheese at the Fed at the time, during a serious financial hearing. It was like a silent shout-out to the crypto world, right? Fast forward, and that same sign, which kind of became a mascot for the Bitcoin buzz, just got snapped up for a cool $1 million. Yep. You heard that right. And guess who's laughing all the way to the Bitcoin bank? Christian himself. Now, Christian wasn't just some random guy. He was interning at the Cato Institute when he pulled off this stunt. And it wasn't just any old sign. It was a statement. A meme before memes were even a thing, sparking a trend that blew up on social media. But here's the juicy part. The sign didn't just get sold. It went for 16 BTC. In today's money, that's over $1 million. And only in Bitcoin, because, well, It's Christian Langalis we're talking about. The guy's become a bit of a blockchain celeb since then, topping the influencer charts in 2017. And what's he doing with all that crypto cash? He's pouring it into his startup, Terrell Corp, which is all about building a wallet for Bitcoin's Lightning Network on Urbit. Talk about investing in the future, right? So, there you have it. A piece of paper turns into $1 million payday, and a sign becomes a symbol of the crypto revolution. Only in the wild world of Bitcoin, folks. Let's break down the drama with Samurai Wallet Mixer in a more chatty way. So, the US bigwigs have thrown the book at Samurai Wallet, claiming it's been a bit of a naughty service, handling a whopping $2 billion in illegal transactions and laundering over $100 million. Yikes. The plot thickens with the founders, Keon Rodriguez and William Lonergan Hill, getting nabbed by the feds. Rodriguez is cooling his heels in a U.S. cell, and Hill? Well, he's chilling in Portugal, waiting for a free trip back to the States. The DOJ's main man, Damian Williams, didn't mince words. He's like, these guys helped clean dirty money from the dark web's nastiest corners, like Silk Road and Hydra Market, and other scammy stuff. And now they're staring down the barrel of a 20-year and 5-year vacation in the slammer, respectively. But wait, there's more. Uncle Sam's gone all Hulk smash on Samurai Wallet's website and yanked their app off Google Play in the US. Talk about a shutdown. Here's the techie bit. Samurai Wallet had these services, Whirlpool and Ricochet, that basically played mix and match with users' cash to make it hard to trace. Pretty clever, but also pretty illegal, it seems. And get this. The DOJ's got receipts, social media posts where Samurai Wallet's all, "Hey, Russian tycoons, come on over," while totally snubbing Europol's warnings. Despite all this, some folks on Twitter are rallying behind Samurai Wallet, arguing it's just a privacy tool and the government's being a big bully. Privacy's a hot topic in crypto land, especially after Ethereum's head honcho Vitalik Buterin gave a shout-out to the privacy protocol Railgun. The US isn't playing games with these mixers anymore. They've been cracking down hard, like with Blender.io for the Ronin Axie Infinity hack, and they even put Chipmixer and Tornado Cash on their naughty list. So, there you have it. The tale of Samurai Wallet Mixer, a cautionary story of crypto, privacy, and the long arm of the law. So Hong Kong is stirring things up in the crypto world. They're rolling out 6 new ETFs that are all about Bitcoin and Ether, and guess what? They're going live on April 30, 2024. It's like they're setting up their own crypto marketplace. Here's the scoop. The big bosses at the Securities and Futures Commission in Hong Kong have given the green light to these ETFs. We're talking about 3 for Bitcoin and another 3 for Ether, managed by some heavy hitters: China Asset Management, Bosera Capital, and Harvest Global Investments. Now, unlike the US, where Bitcoin ETFs are more like IOUs, Hong Kong's playing it cool with a physical setup. That means they're using actual Bitcoin and Ether to back these ETFs. It's a pretty big deal because it could pump up the volume and value of assets under management. And here's a juicy bit. There's a bit of a price war brewing over management fees. Harvest is playing it super smart by saying no fees for the first 6 months, then just 0.3% after that. Bosera's going steady with a 0.6% fee, and China AMC, they're the priciest of the bunch at 0.99%. The word on the street is that these shiny new ETFs could attract a cool $1 billion within a year or two. But not everyone's buying the hype. Bloomberg's Eric Balchunas is like, hold your horses, folks. He thinks $500 million is more realistic, especially since the Hong Kong ETF scene is still pretty small, and folks in mainland China can't jump in on the action, at least not officially. So that's the lowdown on Hong Kong's latest crypto move. It's a mix of excitement and a reality check, all wrapped up in the world of high finance. Cool, right? So Changpeng Zhao, the guy who started Binance? Well, he's in a bit of a pickle. Looks like he might be facing a 3-year stint behind bars come April 30th. Yeah, he got caught up in some money laundering mess and broke the anti-laundering law. The final verdict's due at the end of the month. CZ had to step down as the big boss of Binance last November after owning up to the laundering charges. And get this, Binance had to cough up a whopping $432 billion in fines. Talk about an expensive mistake. But here's the kicker. Even with all that drama, CZ managed to post a $175 million bail and walked out free. At least for now. And it gets wilder. Turns out Binance was mixed up in over 100,000 shady transactions. We're talking serious stuff like funding terrorist groups including Hamas, Al-Qaeda, and ISIS. Plus, they let some really bad stuff slide through their system, like child abuse materials and nasty computer viruses. To top it all off, Binance's wallet is taking a huge hit with a $1.81 billion fine and another $2.51 billion they've got to pay back. So yeah, it's been a rough ride for CZ and his crypto empire. Let's see how it all pans out in court. All right now, let's chat about CZ's letter. It's like a heartfelt note from a guy who's had a bit of a rough patch. So CZ, the dude who used to run Binance, penned this letter to a judge in the US, basically saying, "My bad, I messed up." He's got this sentencing thing coming up for some pretty serious stuff about money laundering and breaking sanctions rules. CZ starts off by tipping his hat to the court and the probation office, thanking them for hearing him out. He's like, "Thanks for getting to know the real me, not just the CEO me." He's owning up to his mistakes, admitting he should have been on top of the whole compliance game from day one. Now, here's where it gets interesting. CZ's been busy beefing up Binance's defenses against money laundering since 2022, making it one of the tightest ships outside the US. But he's not just talking shop. He's also saying sorry to his fam, his pals, the Binance crew, and all the crypto enthusiasts out there. He knows his choices shook things up for a lot of people. Life's taken a turn for CZ, he's hung up his CEO hat and is facing a new chapter. He's looking forward to doing some good in other ways, like diving into biotech and helping out kids who could use a boost in education and living standards. But here's the kicker. The U.S. Department of Justice isn't buying the whole Remorse Act. They're pushing for a 3-year timeout in the slammer for CZ, claiming he played fast and loose with U.S. laws for a quick buck. They say Binance was all about luring in U.S. customers without playing by the rules, which let some shady money slide through. So that's the down low on CZ's "I'm sorry" letter. It's a mix of "I'll do better" and "here's what I've done," with a side of legal drama. Quite the story, huh? Hey, let's talk about Anthony Scaramucci's latest crypto buzz. He's super pumped about Bitcoin and this new coin called Borrow Finance, ROE. So here's the deal. Bitcoin's like the new age Berkshire Hathaway, according to Scaramucci. It's this compounding gold mine that's just getting started. Think of it as the early days of Berkshire, but for the digital age. And get this, Bitcoin's market cap has blown past Berkshire's, hitting a massive $1,215 trillion. That's huge, right? Now, onto the new kid, Borrow Finance, ROE. This altcoin's got brains. It's powered by AI and built on the Polygon blockchain. It's gunning for Cardano's spot with something called cross-fee, which is like DeFi on steroids thanks to AI oracles. They've got dApps, token swaps, liquidity pools, the whole 9 yards. But wait, there's more. Borrow's not just about cross-fee, it's diving into NFT gaming too. Imagine playing games and collecting unique digital assets. Plus, they're handing out governance tokens, giving you a voice in the project's future. It's like being part of a crypto democracy. And for those who love a good meme, they're even giving a nod to Shiba Inu tokens. Who knows, with Borrow's tech, we might see these meme coins hit the gym and bulk up. The cherry on top? Borrow's in pre-sale mode and it's already raked in over $3.8 million. With 67% sold, it's a race to grab a slice of the pie. The pre-sale price? A sweet $0.20 per token. Pretty accessible, right? So, if you're itching to get in on this, Borrow's made it easy. They're accepting Bitcoin, USDT, BNB, ETH, and even card payments. It's like an all-you-can-eat buffet for crypto payments. To wrap it up, Scaramucci's betting big on Bitcoin being the asset of the century, and Boroi Finance is the shiny new toy in the crypto playground. With its AI edge and gaming perks, it's ready to shake things up. So, if you're looking to hop on the crypto train, Boroi might just be your ticket. All aboard the AI revolution, folks. Mark Zuckerberg, Meta's head honcho, starts off an earnings call, and he's all about AI and the metaverse. He's betting big on these projects, even though they're currently just gobbling up cash. Investors? They're spooked. Meta's stock price just took a nosedive, erasing a cool $200 billion. Despite this, Meta actually had a decent quarter, beating profit and revenue expectations. Zuck wasn't surprised by the market's cold feet. He's seen this movie before, investing in new tech like Reels and mobile before they started bringing in the bucks. He's playing the long game, focusing on how these investments could eventually turn into ad revenue. He's pumped about their new AI stuff like Meta Llama 3 and Meta AI, and he's eyeing the headset market for work and fitness. They've even opened up their operating system to speed up mixed reality development. But let's be real. Meta's Reality Labs is a money pit right now, with sales not even close to covering their losses. Still, Zuck's got some wiggle room. Meta's stock had a good run recently, and they've been cutting costs to stay agile. Zuck's clear. It's going to take time and money before these AI investments start paying off. But he's confident it'll be worth it, and he's asking investors to hang tight for the ride. It's a big bet, but he's convinced it'll pay off in the end. So, VTB Bank, Russia's state-run lender, is in a bit of a pickle with JP Morgan. They're trying to claw back a hefty $439.5 million that JP Morgan froze after Russia marched into Ukraine. The Russian court's playing for the home team and told JP Morgan to cough up the cash, which means grabbing whatever JP Morgan has in Russia, including stakes in a subsidiary. VTB's lawsuit is all about getting those frozen funds back, especially since JP Morgan might be saying do svidanya to Russia. Investors are watching this like a tennis match, set for July 17th. JP Morgan's zip the lip, and VTB's not spilling the beans either. This whole mess shows the tightrope American banks walk, balancing Western sanctions on one side and their global biz on the other. JP Morgan, led by banking bigwig Jamie Dimon, is feeling the squeeze. The U.S. has been piling on sanctions and trade blocks against Russia for 2 years now. Biden's even signed a new bill to help snatch Russian assets in the States and encourage Europe to do the same. JP Morgan's playing defense in the U.S., suing VTB to keep the funds frozen because Uncle Sam's rules say no-go on releasing them. If JP Morgan has to play by Russia's rules, they're staring down a loss as big as a bear. They're arguing that VTB's trying to play the game on home turf, even though they agreed to settle disputes in the U.S. JP Morgan's worried this could leave a mark, and not the good kind. It's a high-stakes standoff, with JP Morgan trapped between a rock, U.S. sanctions, and a hard place, Russian court orders. Nigeria's central bank, CBN, is cracking down on crypto. They've told all the banks to keep an eye on anyone dealing with crypto exchanges. If they catch you, no more withdrawals or payments for you. There's chatter that the CBN might even start arresting folks suspected of trading USDT on what they call illegal platforms. But remember, back in December 2023, Nigeria lifted its crypto ban so banks could actually work with crypto exchanges. It seems they realized crypto is a big deal globally and didn't want to miss out. However, it looks like they're still trying to keep things tight, especially with Binance. Last year, the CBN was worried about some shady $26 billion transactions. And it's not just about the money. Some big names from Binance Nigeria got into hot water. Tigran Gambarian, a top exec, got arrested, and another director, Nadeem Anjawala, tried to skip town but got nabbed in Kenya. So, it's not that Nigeria wants to ban crypto completely. They see its value. But they're super keen on keeping a tight leash on this young and wild crypto market.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.